Today I'm going to show you another secret to how to enter profitable trades using Fibonacci time and price measurement to create a box that represents an extremely accurate target area for the end of a correction, which is the proven most massively profitable area to enter a trade. Using this along with an overall knowledge of how to identify ends of corrections can increase your winning trades and enable you to start having increase in capital the way that you've always wanted. So let's get started now. In my previous video on Fibonacci trading strategies, I made it clear that Fibonacci by itself can never be a trading strategy. It's a tool to help you to identify areas of probability for turning points that you should be able to identify with or without Fibonacci. In that video, I openly revealed the most valuable secret of how to use Fibonacci, and you can watch that video right up here. The key to knowing how to trade is having the skill of visually being able to recognize trends and corrections. And when you can do that, you can make money with or without Fibonacci. And this is so important because this lack of understanding is why many traders using Fibonacci may lose 60 to 70% of their trades and then give up and say it doesn't work. But using these tools in the way that I'm about to show you can be amazingly useful and assist you with the very selective process of identifying high probability entries. So knowing how to use Fibonacci requires that you are intimately familiar with the natural patterns and cycles that financial markets never stop making. And you can use this tool to measure a trend and determine areas of probability where a correction will end. And when you see this phenomenon, you should immediately realize that this is the most profitable area to enter a trade, and the most probable area and technique that is likely to produce profit as a result of entering. And you should be able to see that this is not a theory or an opinion, but something that is naturally true about financial markets. Once you discover this to be true, you will drop all other methods and just focus on developing and refining this skill. If you don't do that, the only reason would be if somehow you fail to realize that that's true. Listen to this section over again if you didn't catch that. Now, let's look at how to do this. So once you start to develop this skill, you're going to see trends and corrections all over the place. And as I sometimes mention, there are additional steps that can help you to be able to see trends and corrections, not just in some specific place where you open up a chart, you happen to see one right there, but you will be able to see them everywhere, but there are additional steps to be able to see them. And that's part of what we do in our live training sessions every day. But if you just take a trend like this one right here, I can see that is the shape of trend. I can recognize that. So therefore, I can measure that trend from beginning to end. And although this correction has already ended in the past, it's a good example, you can see that it ended past the 61.8% level. Then if I use the Fibonacci time measurement tool and measure from the beginning to the end of the trend, and I have had to add a couple of levels in here because as far as Fibonacci numbers, this tool isn't really that much based on Fibonacci. It's very approximate. So the approximate area in time is going to be about 50% of the time of the trend to 100% of the time of the trend. And that enables you to place a rectangle in that area that shows you a highly probable area of time and price where the correction is likely to end. And so you can see this one ended pretty close to right in the center of this area. Do they sometimes end after this area of time or before this area of time? Absolutely. There are some corrections that go way past the amount of time. Here on the Aussie Swiss was an example of a really nice correction, but in this case, it ended before that area of time and right in the area of price. So if you find a clear trend, you can measure the trend from beginning to end. You don't have to count anything, but seeing a trend is a skill based on a shape. Then you can measure from beginning to the end of the trend in time. And again, the purpose of this is not to do it in hindsight, is to do it before the correction has ended. The purpose of me demonstrating this now is for you to see how it works. So you can see this perfect trend, 1, 2, 3, 4, 5 of a perfect trend, is ABC of a perfect correction, ended right squarely in that time and price target area. Of course, it's a pretty big time and price target area. That's why ending inside of that time and price target area isn't enough for you to be able to have the skill of being able to identify the end of a correction. There is more to it than that, and that's why you can see it with or without this time and price target area, but it can be a very useful tool for people to gauge about where would a correction end. Where would it end in time? Where would it end in price? And this will help you every time you see a correction to have a good idea about the size of a correction and about the size in terms of the price and the retracements and the size in the terms of the amount of time. And if that can help you and increase the number of winning trades that you get by not getting in when it's nowhere near the time or price, then this will be useful to you. Now, if you'd like to see this demonstrated in real time every day on live charts and enter trades every time that this happens, you can see that in our live sessions, which we have every day during the New York and London sessions. And if you'd like to find out what really works in trading, just go to tradingmastermind.com and sign up for our free professional trading course. Now, if you'd like to see another video that goes into more detail about how to do all of this, you can watch that right over here.